Good evening, everyone. Our group will be presenting impairment. I myself, Angeline David, and my group members are Chitra Sugumaran, Surendran Krishnan, and Trashana Priya Rajagopal. First slide will be Introduction to Asset Impairment. What is asset impairment? An impaired asset is an asset that has a market value less than the value listed on the company's balance sheet. When an asset is deemed to be impaired, it will need to be written down on the company's balance sheet to its current market value. So how does it work? An asset is impaired if its projected future cash flow are less than its current carrying value. An asset may be impaired as a result of materially adverse changes in legal factor that have changed the asset's value, significant changes in assets market price due to a change in consumer demand, or damage to its physical condition. Another indicator of potential impairment occurs when an asset is more likely than not to be disposed prior to its original estimated disposal date. Asset accounts that are likely to become impaired are the company's account receivable, goodwill, and fixed asset. Assets are tested for impairment on a periodic basis to ensure the company's total asset value is not overstated on the balance sheet. According to generally accepted accounting principle GAAP, certain assets such as goodwill should be tested on an annual basis. GAAP also recommends that companies take into consideration events and economic circumstances that occur between annual impairment tests in order to determine if it is more likely than not that the market value of an asset has dropped below its carrying value. An impairment loss should only be recorded if the anticipated future cash flows are unrecoverable. When an impaired asset's carrying value is written down to market value, the loss is recognized on the company's income statement in the same accounting period. Next, we are going to see the example of asset impairment in financial statement. Impairment loss stated in financial statement and notes. The one that we are looking is Gunting Berhard's income statement. Asset impairment in financial statement is net impairment loss. It should be recognized as expenses in income statement. So the next slide will be the impairment loss not stated in financial statement but stated in the notes. If you can see, there is no impairment loss stated in statement of comprehensive income, but notes to the financial statement, it is stated as impairment loss on property, plant and equipment, and also right of use asset.
I will continue with definition and guidance. Let's see what is asset impairment and what guidance for asset impairment. According to MFRS 136, an entity required to recognize an impairment loss when the carrying amount of the asset or the CGU exists is a recoverable amount, and also MFRS 136 provide guidance on how to recognize that loss. So what is carrying amount and recoverable amount? Carrying amount is the cost of an asset less accumulated depreciation and impairment loss, and the recoverable amount is higher on asset or CGU less fair value cost to sell its value in use. Let's go through how the standard provide guidance measure according to MFRS 136 paragraph 225, which is a price is binding sale agreement in an arm's length transaction adjust on incremental cost that will directly contribute to the disposal of asset. Two parts of definition: fair value determined using following value hierarchy, and then the cost of disposal example: legal cost, stamp duty, cost of removing asset. In the value in used, the present value of the future cash flow expected to derive from the asset of CGU. MFRS 136 paragraph 30 prescribes the element that should be reflected in the calculation of asset CGU or VIU, including estimate of future cash flows, expectation about possible variation in amount or timing of future cash flows, time value of money, price of bearing uncertainty inherent in asset, other factors such as liquidity. This is the example of fair value less cost to sell. We can find that it as notes in financial statement of company Genting Berhad slide. The VIU calculation is derived from the projected income from the annual rented rate currently marketed for the recognized those properties space. This is an example of a value is used in Genting Berhad Axia VIU amount calculation that derived projected from the annual rate. The market value of quoted shares are trended in value, active market, and are within level 1 of the fair value hierarchy. Continue with application of MFRS 136, which can apply in accounting of impairment assets and which can't apply in impairment asset. Which can't apply is A. Inventory MFRS 102, B. Contract asset and asset arising from cost to obtain or fulfill a contract MFRS 15, C. Deferred tax asset MFRS 112, D. Asset arising from employee benefit MFRS 119, E. Financial asset in the scope of MFRS 9, F. Investment property that is measured at fair value MFRS 140, biological asset related to agriculture activity MFRS 141, G. H is a deferred acquisition cost, an intangible asset arising from an insurer's contractual arise under insurance contract within the scope of MFRS 4, and the final I is non-current asset or disposal groups classified as a held for sale in according with MFRS 5. Just remember what a standard and not to apply, because other than this 9, A to high can apply to impairment asset.
Good evening to doctor and fellow friends. Okay, my name is Tarshana Priya, and next slide is about individual asset and cash generating unit, which is CGU. Okay, an individual asset is a resource or a property having a monetary or economic value possessed by an individual or entity capable of generating some future economic benefit. Okay, some example of individual asset is PPE, which is plant, property and equipment, for example, like such as like land, building and equipment. Okay, for cash generating unit is the smallest identifiable group of assets that generates cash inflows that are largely independent of the cash inflows from other assets or group of assets. Okay, cash generating units could represent an entire entity, department or business units within an entity, and the production lines within a department or within the entity. Okay, next slide is about indicators. Okay, Financial indicators are statistics extensively used to monitor the soundness, stability, and performance of various sectors of the economy. Okay, indication of impairment. Okay, there are two types of sources, which is internal and external. Okay, internal sources, which is obsolescence, which is physical damage. Second is significant changes, which is a restructuring or discontinuing. Third is internal reporting evidence. Okay, for under external source, first is decline in market value. Second will be significant changes, which is in terms of market, technology, or legal economy. Third is increase in interest rate. Fourth is current assets is higher than market capitalization. Next slide is about annual test for impairment. Okay, intangible assets with indefinite useful life or intangible assets not yet available for use. So test annually by comparing its carrying amount with its recoverable amount, or perform or at any time during an annual period, performed at the same time every year. So different intangible assets may be tested for impairment at different times. And also, if an intangible asset was initially recognized during the current annual period, that intangible asset shall be tested for impairment before the end of the current annual period.
Good evening to everyone. We continue with reversal of impairment loss. Okay, the first one is indicator for reversing an impairment loss. Okay, the second one is reversing impairment losses for individual assets. The third one is reversing impairment losses for CGU. Okay, the first is indicator for reversing an impairment losses in addition to accessing evidence of possible impairment. Entities must also access whether there is any indication previously recognized impairment loss for an asset other than goodwill no longer exists, or impairment amount may have decreased in any indication of possible reversal in identified. The entity must estimate the recoverable amount of the asset similar to the list provided in MFRS 136. Indication when they might be an impairment loss. The standard also provided a non-existent list of second test when a previously recognized impairment loss may no longer existent. These are summarized below. There are two sources of information which are internal, external. For the internet, significant favorable changes have occurred or are expected in the extent to which an asset is used or in expected to be used. For the example, first cost include during the period, improve or enhance the asset performance. Second is or the restructure the operation to which the asset belong. Okay, point number 2 is evidence is available from internal reporting that indicates that economic performance of an insect is all will be better than expected. Next to the external observable indication, that the asset value has increased significantly during the period. Second, significant favorable changes have occurred or are expected in the technology, market, economic, or legal environment. Third is market interest rate or other market rates of eating and investment have decreased during the period, which will decrease the discount rate used in calculating an asset value in use for information. Most of the reversal indicator listed are the inverse of the loss indicator listed in MFRF 136, in particularly an increase in the market capitalization above carrying a value of entity net assets is not listed as a reversal indicator. Next. Okay, the next is diversity in payment losses for the individual asset other than goodwill. When recoverable amount is recalculated and exceed the asset carry value, the carrying amount is increased to the recoverable amount subject to selling, such as an up limited. The increased carrying amount can exceed the carrying amount that will have been determined net of amortization or depreciation had no impairment losses been recognized for the asset in premier years. Forex accurate for using the revaluation model in PPE or the reversal of the impairment losses is accounted for in the same way as a revaluation increase in accordance with those standard. The diagram below this the diagram below depict the requirement for the reversal on impairment losses for the individual asset, and the following example elastic their practical application. I give you one example. First, indication of impairment reversal for a set. If yes, we must calculate the recoverable amount of the asset. Will the reversal of impairment cause the carrying value to exceed the asset's carry amount net automation or depreciation had there been no impairment originally recognized? If no, we must ask the asset carried at the revalued amount. If not, it connected with the reversal in profit and loss. Next, reversing payment losses for CGU. Any reversal of impairment losses for must be allocated to the individual asset. They make up the CTO. Excluding a goodwill, the entity is required to allocate the reversal of an impairment losses to the CGU asset pro rates to their carry amounts. This is again, however, subject to shilling, whereby no individual assets carry amount is inscribed about the level of first is recoverable amount is the determinable, and second is carrying amount that will have been determined net of amortization of depreciation had no impairment loss been recognized for the asset in period. If the shilling check effect for one or more of the CGU asset, the reversal of impairment loss that will otherwise have been allocated to those asset is allocated on a pro rate basis on the other assets subject to the same ceiling. The final slide summarizes what we have discussed in our presentation. That's all from us. Thank you.